But ever since we got that breakout, I was saying this looks like a major trend change to me. And the definition of an uptrend is higher highs and higher lows. And the previous swing low in gold was 1780. As long as we hold above 1780 on any pullbacks, that's going to make a higher low. And that it looks like we're certainly going to see that.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny from Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. Thanks for inviting me back. It's always fun to speak with you.
It's great to speak with you. And I know last time we had you on, the markets were going crazy after Russia invaded Ukraine. We saw huge moves in gold, silver, oil, and really across all markets. Now, right now, today, we are seeing a little bounce in both gold and silver. What do you take of the cool off we've been seeing in the markets recently in precious metals, but now we're seeing a bit of a rally again?
Yeah, this pullback has been 100% expected. When we first got the breakout preceding the Russia-Ukraine tensions, the second week of February, we said, hey, look at this breakout. This is real. This is happening on big volume. We had broken out of that triangle pattern that really everyone was watching, anyone who looks at charts. And the next thing to look for was a higher high above 1880. Well, we got that before the Russian-Ukraine tensions heated up. And, you know, we quickly shot up to $2,078, as everyone knows, and we had gotten really overbought. For our members, we actually took out a slight short position or a hedge to protect against this pullback. But ever since we got that breakout, I was saying this looks like a major trend change to me. And the definition of an uptrend is higher highs and higher lows. And the previous swing low in gold was 1780. So my stance remains the same as it's been for the last couple months now, that as long as we hold above 1780 on any pullbacks, that's going to make a higher low. And that it looks like we're certainly going to see that. Now, we're sitting here today just above, right around 1950, 1940 and change. The next support is 1920. If that doesn't hold, you've got 1880 below that. And then below there, you've got the 200-day moving average at about 1820. So those are the support levels I would look to hold. But even if this current level fails, you know, we've got plenty of support all the way down to 1780. And any pullback doesn't concern me at all.
So it seems like we have quite a bit of strength in gold right now. What are you looking for long term if you want to share the chart with us?
Yeah, this chart goes back to 2011. I'm sure people have seen a chart like this before. It's a big cup and handle pattern. And there's two ways a few ways from a technical perspective that you can get a measured move target. So the first two would be to take this, here's the cup and here's the handle. You can take this handle part of the cup and just kind of flip it. And you see the 1675 low, 2089 high. That's about a $400 difference. So if you take 2089, once we break above there and flip it, that gives you a measured move target of about $2,500 gold. That's the most conservative way to do it. A little bit more aggressive way would be to take the cup portion, which has a bottom around 1045 or $1,045, and up to 2089. That's about a $1,000 difference, and you can kind of flip it. So once we get through 2089, that gives you a measured move target up around $3,000. So neither one of those targets would surprise me at all over the intermediate term. And by intermediate term, I mean, 6 to 24 months. But ultimately, I think we're going much higher than that. I think $3,000 is a very conservative longer-term target.
What are you seeing in silver at the moment as well?
Yeah, so if I were looking to accumulate right here, which I am, I buy physical metal every single month, silver is presenting a much, much better value proposition than gold right here, right now, even though I think gold is going much higher. And let me find a nice-looking chart here. This is the weekly chart for silver. And this chart looks very constructive. It is yet to have its big move. As we all know, gold has broken out to a new all-time high in 2020. Well, silver has not done that yet. And historically, whenever gold breaks out to a new all-time high, silver follows suit. And, the previous high in silver was up around $48 in 2011. So look, zeroing in here on the shorter-term chart, you see this bullish arc pattern that's forming above the 200-day moving average. We're also approaching the apex of a triangle pattern. So what I'm looking for in silver, and this is my baseline scenario over the short term, I think we move higher before consolidating and pulling back. So what I'm looking for is a run up towards maybe 28.50, somewhere in that region. Maybe we tap $30 resistance before consolidating. And then once we punch through $30 silver, I think $50 happens faster than many people think. But, the big hurdle to get through on silver is $30. Here's a daily chart for silver, and I'm going to zoom this in a little bit, Elijah. And this will put the daily action in a little bit more perspective. So here's the 200-day moving average here in yellow. And then this triangle pattern. Anyone who looks at charts is probably going to see this triangle pattern. I like real obvious patterns. And the apex of this triangle pattern is going to be reached no later than next week on the 13th of April. Let me get rid of that little green circle so you can see it more clearly. So, as today's price action, I would say, it gets us closer to a breakout. Once we get above this red line here, the path of least resistance becomes a rally towards 27.50, and above there you've got 28.50 and 30. So if we break up and out of this triangle pattern, that's where I think we move up towards 30 before a more meaningful consolidation.
No, we are seeing some weakness in platinum right now. Your take on where that is right now?
Yeah, I won't pull up a chart, but platinum, I just added quite a bit of physical platinum myself. I like it as a speculation. And it's one of the few metals or the only metal that I can think of that has the potential to outperform silver. I'm not predicting that it will, but it could. And it's presenting a very compelling value proposition here. It's sold off sharply from just above $1,200 at the height of the Ukraine tensions, a few weeks ago. And now it's down below $1,000 or hovering right around 1,000. Platinum looks very, very, very attractive right here for long-term accumulation. My favorite way to play the platinum market is just by simply accumulating physical.
And what are some of the reasons you think we've seen this sell-off? Because it seems like the Russia-Ukraine situation couldn't be more bullish for platinum.
Yeah, everyone's talking about palladium and how that market is affected from these tensions. Well, the two places that platinum are produced, along with palladium, is South Africa and Russia. So certainly platinum supply is going to be affected by this as well. It has been a little bit surprising that platinum hasn't responded more favorably, but that's fine for me because I'm a long-term investor and accumulator. So I like this weakness in platinum for long-term accumulation.
Now, as for the stock market, I know since the beginning of the year we had been seeing a pullback, but it seems like we're making a higher high actually now, so the trend may have reversed. What are you seeing right now?
Yeah, so I'll preface that forecasting the general equities is not my specialty, but sometimes you can do a better job of that because I have no emotional ties to the stock market. So I try and be unbiased anyway. But what I'm seeing here in the charts is price hovering right at the 200-day moving average in the S&P 500. That's the most simple definition of an uptrend is when price is above a rising 200-day moving average, along with higher highs and higher lows. So we're sitting right there today, right at this yellow line. For me, I'm still looking to short general equities on any tests of this primary resistance line right here, this red line. We're still a long ways from that, so we're kind of in nowhere's land. Over the longer term, I'm looking lower in stocks, but short term, really no short-term forecast there.
No, we had just seen that the Fed minutes came out and they say that they could be raising rates by 0.5% next time and continuing to do the taper. Your take on how this Fed decision may impact the general markets for the stocks and also precious metals?
Yeah, it's kind of counterintuitive. Whenever the Fed embarks on a rate hike cycle campaign, number one, the metals tend to rise in that environment. And then number two, whenever the Fed is tightening, if you look at the yield on like the 10-year and the 30-year, it tends to go down even though the Fed is tightening. It's kind of counterintuitive, and it's almost like the market is looking past the short-term Fed policy actions towards they're eventually going to have to go back to easy money and reverse this tightening cycle. I think everyone knows that. I think the stock market is starting to recognize that. And when the metals market recognizes it is when we're going to see, the uptrend really resume in the metals.
It does seem like the stock market is anticipating something at the moment because it doesn't seem like there's much reason for it to reverse at this moment higher.
Yeah, exactly. It's almost like general equities are anticipating the Fed reversal towards more easy money, but the metals are looking, right ahead at the, tightening cycle. And it's inevitable that they're going to have to reverse. And, that we've been saying that on your show here for months now, that, look, they're probably going to try and tighten for a while, but it's when they reverse that tightening policy that the metals really move higher and get through that, $2,089 level in gold and $30 in silver. And when that reversal happens, I think that's probably when we'll see new highs in silver.
Now, as for the dollar, we're seeing the U.S. dollar index nearing 100. We're seeing quite a rally recently. It doesn't look like we've seen these levels since kind of early 2020. So what do you make of why we're seeing this rally right now?
Well, that's the beauty of charts, is that I don't really have to answer the why question, although I could speculate on that. But from a technical perspective, we realized that the dollar was entering a new uptrend back in mid-February when it broke out of this very clear downtrend line, a nice volume. It's now above a rising 50 and 200-day moving average. And so the rally is not really surprising. And right now we're sitting just up against this $100 resistance. We actually touched just over $100 earlier this morning. Now, I'm not calling a top here, but just so far, the way this daily candle looks, you've got a long upper wick just above resistance, and RSI is getting overbought. So today really could be, it could be potentially a short-term top or even a intermediate-term top in the dollar. It's also making what's called a negatively divergent higher high. Now that many people may not know what that is, but that's when price makes a higher high, but a momentum indicator or an overbought indicator like RSI makes a lower high. And that's usually a sign of slowing momentum. So it looks like this uptrend is slowing and running out of steam. And I wouldn't be surprised to see a reversal in the dollar here. But for now, the trend is up.
Now, if we do see that reversal, that would be bullish for precious metals, right?
Yeah, I think of the dollar as either a headwind or a tailwind. I mean, you can still move higher in the face of a rising dollar, just like we've done for the last couple months here. So it would be interesting to see. Normally, there's an inverse correlation. When the dollar goes down, the metals go up. But sometimes when they rally together, they can also pull back together. So I wouldn't necessarily say, hey, if the dollar reverses here over the very short term, that means that gold's going to move higher immediately. But it'll be interesting to track.
Now, another market you keep an eye on quite closely is uranium. What does that look like right now?
Yeah, uranium has just been on fire for several months. And even in the last few weeks here, the spot price of uranium is breaking above $60. And we're just starting to, approach some levels where some of these mines can perhaps start to think about coming back online. And some of these mining companies can secure long-term contracts that will make the companies profitable. So I think we're just starting to see some institutional and big money flow into the uranium sector. But the market caps are just so small in these stocks that it kind of prohibits big money from flowing in. But that's going to happen. So I think there's still a lot of runway ahead for uranium. Last I checked, there was only like 68 or 69 pure play uranium mining companies in the world. So when capital starts to flow into the sector, the stocks just move very fast. And what's interesting is in the last few weeks here, it's been the metal that's really moved up. But the mining shares really haven't responded the way you would think. I mean, they've moved up, but not quite as much as you would think based on the metal price. So I think the mining stocks could do some catching up here.
Do you think we need a sustained high price for uranium for those stocks to really move?
You know what? That could be it, because perhaps some market participants are thinking this is just a flash in the pan because the tensions in Eastern Europe. I don't think that's the case at all. That's what I like so much about uranium. That sector is that it's a pure supply demand scenario, and apart from geopolitics and the Sprott Physical Uranium Trust and all this, the world is going to need more uranium. And in order to incentivize that new production, the price has to rise. I mean, it really is as simple as that. As Rick Rule used to say, if the price doesn't go up, the lights go out. And that's playing out now. So there's a lot of upside here in uranium.
Now, before I let you go, I did want to kind of come back to the gold and silver markets. If you want to reiterate for our viewers what they should be looking out for in those markets.
I think strategy is more important than short-term predictions. So what I'm looking for is a couple of scenarios here. So we're hovering above 1920 support in gold. There's two ways that consolidations can play out, with time or with price. That's the way overbought conditions can be worked out. So if 1920 support holds, I can see us grinding sideways for just maybe another month or two, or even longer, a couple months. But we don't see the price sell off. Now, if we get a sharp pullback down towards 1820 or thereabouts, that would be more painful in the short term, but it would probably mean that the correction ends quicker. So personally, I would prefer to see that sharp pullback and then more of a V-shaped recovery as opposed to the sideways grind for a couple months. But those are two scenarios I'm looking at. But regardless, I think downside risk is minimal relative to the upside potential over the next year or two in gold and silver.
And that's what we've talked about many times in the past, is it seems like for both gold and silver, the downside risk is very minimal, but the upside potential is very high. And especially if you're holding physical metal, it's easier to hold on to that than, if you're just trading futures or trading ETFs. You have the physical metal, it's in your possession, it's wealth. You see it as, and even if the spot price falls, you still have something of real wealth in your hands.
Absolutely. And first of all, I think of it as insurance policy. And, there's some metal I'm just never going to sell, even no matter what the price does. That's my insurance policy. I plan to leave it to my kids and hopefully to their children and their children's children. But there are brief periods in the cycle where you can not only preserve your purchasing power, but grow it exponentially in precious metals. And, silver and gold are presenting fabulous opportunities here, especially besides what's going on in the monetary system and debasement of currencies and geopolitics, just the other risks that haven't really been a factor in previous bull cycles, like cyber attacks. That's not something the world was worried about in the 70s bull run. And now you can't go a day without hearing about the potential for a cyber attack. Well, if there's a cyber attack, you're going to want some physical metal. And if the banking system is temporarily closed down, these are risks that are very real now. And just add to the bullish case for, the case for owning some physical metal stored outside of the banking system.
All right. Well, Steve Penny, thank you so much for your time today. Before we let you go, where can our viewers find you, and any last thoughts you had?
Where people can find us, at Silver Chartist on Twitter. That's probably the easiest way. We have a public Twitter account. We also do a free weekly newsletter that goes out every Sunday. We're working on developing a new app. There's certain things I like about social media, but certain things I can't stand, obviously the control and third party censorship. So we're creating our own Silver Chartist app, which is just going to be a nice community for Silver Chartist members to encourage each other alongside one another as we work towards achieving our goals and without any kind of third party censorship from Twitter. So, that's exciting. That's coming down the pike. SilverChartistLiberty.com is a place to check out our weekly newsletter. And we do have a low ticket premium option as well, if you'd like to check that out.
Fantastic. Steve, once again, thank you so much for your time, and God bless.
Thanks, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.